Hello dear students, welcome once again to another e-learning session on accounting. Students, इससे पहले कि मैं टॉपिक पे जाऊं, चलिए आपको एक ठो पिक्चर दिखाती हूँ. How would you see this glass of water? आप किस तरह से देखेंगे इस ग्लास ऑफ वाटर को? यह प्रश्न बहुत बार पूछा गया है और इसका उत्तर भी कई बार आम आपको जो मिलता है वो यह होगा, A pessimist would see this glass as half empty. यानी कि जो नकारात्मक व्यक्ति होगा वो बोलेगा यह हाफ आधी खाली है. एंड एन ऑप्टिमिस्ट यानी कि आशावादी कहेगा दिस ग्लास इज हाफ फुल, आधी भरी हुई है. पर क्या आप जानते हैं हाउ वुड एन अकाउंटेंट सी दिस ग्लास? एन अकाउंटेंट विल टेल यू द ग्लास इज इन बैलेंस. सो हियर वी आर. तो आज मैं आप लोगों को बैलेंस शीट के बारे में पढ़ाऊंगी. सो we'll take a look at what is a balance sheet, how it is prepared, and what are the items that goes in the balance sheet, why a balance sheet is prepared, the need of preparing the balance sheet, and all of those. So let's go ahead. A balance sheet. What is a balance sheet? A balance sheet is a financial statement that shows the business assets and liabilities at a particular date. That is usually the last date of a financial period. Let's know more about balance sheet. What are the features of balance sheet? Now first feature is it is a statement, not an account. That means it does not have a debit or credit side like we had in case of trading account and profit and loss account, but it is a statement, it is not an account. Second, it reveals the financial position of a business concern. Financial position, I had also explained in my earlier session that what does it mean? Financial position means what the business owns as on a particular date and what it owes. Owes means उसकी देनदारी कितनी है उस business की, and owes, it owns is the property, उसके assets कितने हैं. Third, it holds good on a particular date. Balance sheet, it holds good as on a particular date. Not on the preceding date or not on the succeeding date, but as on a particular date. So when we prepare a balance sheet, we'll see that it is prepared as at a particular date. Next, it shows the assets and the liabilities. That means what are the assets of a business? We'll take the look at what are the types, what is the nature of the asset and the amount of the assets, and the nature and the amount of liabilities. And fifth one is balance sheet always balances. That means the asset side must always be equal to the liability side. So that is why it is said that the balance sheet always balances. Let's have a look at this. You can see the assets is equal to liabilities plus capital. Assets, they are the cash, the property, the inventory of the business, all those form the assets. That is equal to the liabilities plus capital. Liabilities, what the business has to pay to the outsiders. Capital is the owner's investment. That means what the business has to pay to the owner or the proprietor. Now how is it prepared? If all of you remember, when I was discussing about trading and profit and loss account, I had told that the trading account, from the trial balance, all the nominal accounts will go either to the trading account or the profit and loss account. Now what is left in the trial balance? We are left with the real and personal accounts. So these real and personal accounts, they are taken to the balance sheet. Now accounts which are having debit balances, they represent assets and they are shown on the right hand side, that is the asset side of the balance sheet. And the accounts which are having credit balances, they represent the liabilities and they are shown on the left hand side, that is the liability side of the balance sheet. Now if we take, how the capital which is also a part of the balance sheet, how the value in that is disclosed, the net profit which is disclosed by the profit and loss account, that is added to the opening capital, and the drawings. Now children, I would like to speak about the thing that drawing which is showing a debit balance in the trial balance, that will be deducted therefrom to find out the closing capital. That means first from the capital to the capital we will add the net profit, and then from the total we are going to deduct the drawings. So it will be clear when we solve a problem on balance sheet. Now let's take a look at what are the items that are shown in a balance sheet. So let's take a look at the asset side. All of you remember in the last year you have studied about the different types of assets, what are fixed assets, what are current assets, what are fictitious assets. So let me have a quick recap of all of those. Fixed assets. Now the assets which are acquired for long-term use and are not intended for sale, those are fixed assets like land and building, furniture and fixtures, etc. Coming to current assets are those assets which are, that means those assets which can be converted into cash very quickly, that is within 1 year. So within 1 year, current assets that can be converted into liquid assets, they are like your cash, they will be debtors, they will be inventory, that is the closing stock, bills receivable, all of these will fall under current assets. The third one is fictitious assets. So what is the meaning of this word fictitious? Fictitious means that which is not real. So if that which is not real, that means what will fall under this category, fictitious assets? Now at times the business makes huge expenditure on certain heads like heavy advertisement expenditure. So if the entire expenditure the business debits in 1 year in the profit and loss account, in that case the business will face loss, a heavy loss. So what the business does it, now what is the benefit that the business will derive out of that particular expense, for how many years it is going to derive the benefits. So they divide that expense into those many number of years. So one part or one portion of that particular expense, it goes to the PL account, the rest is shown on the asset side under the head of fictitious assets. Am I clear? Now coming to the liability side. Under the liability side, the first head that will appear is capital. As I already told you that capital is the amount of money invested by the proprietor in the business. So capital plus what will add to that, will add the net profit that has been taken from the profit and loss account, that is brought from the profit and loss account. And from that total we are going to deduct the drawings, and that will give us the capital. Next, reserves. If the business has any reserves, that will also appear on the liability side. Long-term liabilities. Now what are these long-term liabilities? As we know, liabilities are the obligations that the business has to pay, the obligations of the business to pay to the outside parties. So when we say long-term liabilities, they can be your long-term loans, they can be debentures. If the business has anything, that payment that will go beyond 1 year, that means you can use that for 5 to 10 years. The business can use this particular amount for 5 to 10 years. So it is not repayable in the short run. So those are called as long-term liabilities. Coming to current liabilities, those obligations of the business that fall due to be paid within 1 year. Current liabilities, within 1 accounting year, the business has to pay those liabilities. So those are called as current liabilities. For example, sundry creditors. If it is short-term loan that has to be paid within 1 year, it can be bills payable, it can be any other liability that the business has to pay within 1 accounting year. So those are the items that are shown in the balance sheet. Now there is something called as marshalling in case of a balance sheet. Now what is this marshalling? Marshalling means arrangement of assets and liabilities in a specific order. So when we are arranging the assets and liabilities in a balance sheet, they have to be arranged in a particular order. So in what ways we can arrange? They can be arranged in 2 ways. First is in the order of permanence, and the second is in the order of liquidity. Now what is this in the order of permanence? Order of permanence means the most permanent asset, that is the asset which will be there with the business for a longer number of years, that will find a place first, and as we move down gradually it will become less permanent. And similarly on the liability side, if we say in the order of permanence, so those liabilities which are going to be with the business is not going to repay them in the near future, they will find the place first, and as we move down it gets on less permanent. And when we speak about in the order of liquidity, that means the most liquid asset, that is the cash, that will find a place first, and as we move down it grows on, it moves towards permanence. Similarly, the most liquid liability that the business has to pay earlier, that will find a place first. So now let's take a look at the format of a balance sheet. Now this is an overall view of the format of a balance sheet. the balance sheet of the firm for which you are preparing the balance sheet. That means the trader, the business for which you are preparing balance sheet of dash, as at dash means on which date are you preparing the balance sheet. So that will be usually at the end of the financial year, the accounting year. And coming to the, we can see the liabilities are there on the left hand side and the assets on the right hand side. So under the liability side, we have capital, we have reserves, long term liabilities, we have current liabilities. And coming to the asset side, on the asset side we have fixed assets, we have current assets and fictitious assets. Now this I can say you, this is in the order of permanence. Now I will show you a more, a more detailed feature, that if it is in the order of permanence, how the various assets and liabilities will appear. So let's have a look at this. Liability side, as we can see, capital, to that we added net profit. From there on, we deducted the drawings from the total, and then the net, it comes to the outer column, that is the amount column. Then we have reserve fund. If the question gives you reserve fund, that will appear on the liability side in the balance sheet. Long term loans. So if there are any long term loans, they will find a place under this head. Current liabilities, I have bifurcated. You can see we have creditors, we have bills payable, any kind of outstanding expenses, bank overdraft. So all of these, the total, will take the total to the outer column. Let's move on to the asset side. On the asset side, we have fixed assets. As you can see, in the fixed assets, we have goodwill, land and building, plant and machinery, furnitures and fixtures. Those are all fixed assets, and I am showing you in the order of permanence. So the most permanent asset lies at the first place, and as we move down, they are becoming less permanent. So then we have current assets. Current assets, we have stock, then we have debtors, bills receivable, prepaid expenses, cash at bank and cash in hand. And remember, at this, both the liability side and the asset side, they must tally. Both the sides must be equal. So let's take a look at this problem. From the following balances extracted from the books of ABC traders on 31/3/2019, you are asked to prepare a balance sheet. So let's take a look at the information which are provided to us. Capital 42,500, net profit 5,400, drawings 1,500, furniture 10,500, debtors 2,100, bills payable 1,360, cash in hand 500, outstanding expenses 1,000, building 38,000, investment 4,000, land 6,000, creditors 7,000, bills receivable 2,480, loan from bank 10,000, prepaid expenses 180. Now below that, those information you are given, stock at the end of the year is valued at rupees 2,000. Now as soon as you get the question, the first thing you need to find out is just scan those items which will appear on the liability side and those items which will go to the asset side. So quickly I will take you through this. Capital 42,500 obviously will show on the liability side. To that we will add the net profit, and from there on we are going to deduct the drawings. As I already said, the drawings will show you a debit balance, but we need to deduct it from this liability side, that is from the capital. Furniture, it will go to the asset side, it will be showing you a debit balance. Debtors, they will be showing you a debit balance, it will go to the asset side. Bills payable, that will go to the liability side because it will show you a credit balance. Cash in hand, we know it's an asset, it will go to the asset side. Outstanding expenses is a liability, it will go on the liability side. Building is an asset, so it will go on the asset side. Investments, again, it will show you a debit balance, so it will go on the asset side. Land, it will go again on the asset side. Creditors 7,000, it's a liability, so it will go on the liability side, it will show you a credit balance. Bills receivable, they will be taken on the asset side because bills receivable will show you a debit balance. Loan from bank, liability, so take it on the liability side. And prepaid expenses, as we have paid the expenses earlier in advance, so it will go to the asset side. Prepaid expenses is 180. Now the stock which is appearing, that is at the end of the year, is valued at rupees 2,000, so that will go to the asset side in the balance sheet. Okay students, now let's take a look at the solution. So let's see how this problem will be solved. I'll first chalk out the format of the balance sheet, and then I'll show you the various how the various items of assets and liabilities will be shown. So balance sheet of, here we are given the name, that is of, let's say, ABC Traders, of Messrs ABC Traders, as at 31st March 2019, or you can write 31/03/2019. So take a look at the format. We'll divide it into two equal halves, and this to my left, this is the left hand side, will have liabilities, and this column will have amount in rupees. Then we'll have assets, again the amount in rupees. So let's go ahead. We'll start with capital, liability side capital. Now capital given to us is 42,500. To that we will add net profit. So the net profit given to us is 5,400. So let's do a totaling over here. This is 47,900 less we'll have drawings. So the amount of drawings given to us is 1,500. So what goes to the outer column is 46,400. So I hope this part is clear. To get the capital, we have added net profit, and then we have deducted drawings from that, and it goes to the outer column, to the amount column, 46,400. Next liability we have is loan from bank. So the loan from bank, the amount given to us is 10,000. Next liability we have creditors. The amount of creditors given to us is 7,000. Next we have bills payable. So the amount of bills payable given to us is 1,360. And next item we have is outstanding expenses. Outstanding expenses. Now these items I had already told you which items are going to go on the liability side and which on the asset side. So outstanding expenses we have is 1,000, that is given to us in the question. So I hope all the items on the liability side are clear to all of you. Now let's move on to the asset side. On the asset side, with the more permanent asset, we'll have land. So land, the value given to us is 6,000. Next we have building. The amount for building given to us is 38,000. Next item on the asset side will have furniture. So the amount of furniture given to us in the question is 10,500. The next item we can find is investment. So investment, the amount of investments given to us in the question, that is 4,000. Next item we have is debtors. The amount of debtors given to us in the question is 2,100. Next item, closing stock. As you can see, the closing stock was given to you below the extract of the trial balance. So the closing stock amount is rupees 2,000. Next we have bills receivable. So bills receivable amount given to us is how much? Rupees 2,480. 2,480. So let me just increase the size, and then we have the next item on the asset side, prepaid expenses. Prepaid expenses. Prepaid expenses, the amount given to us is 180. And lastly, we will have cash in hand. Cash in hand. It is on the asset side. Cash in hand amount given to us is 500 rupees. So as you can see, all the items that were given to us, we have taken some to the liabilities and others to the assets. So all the properties, land, building, furniture, investments, debtors, then closing stock, bills receivable, prepaid expenses, cash in hand, they have all gone to the asset side. Now what we need to do is, we will do the totaling. So the total on the liability side and the total on the asset side. So the totaling will be 65,760, and on the asset side as well it should be 65,760. Now it's important that both the sides, the asset side as well as the liability side in the balance sheet, it must tally. And once you are done, we'll just close this. So this is the format of the balance sheet, and we have taken a look at this solution, the problem which was given to us. So let me just take you through this solution. The balance sheet of the particular trader, if the question gives you the name of the trader for whom you are preparing, please write the name of the particular trader there, and as on which date you are preparing the balance sheet. So it is usually it will be given to 31st March. In this question given to us is 31st March 2019. Then we chalked out the format. On the left hand side we have the liabilities, on the asset side, and on the right hand side we have the assets. So first we move on to the liabilities side, that is capital. We had added net profit, then we deducted the drawings and we took it to the outer column. Then the other liabilities, that is loan from bank, creditors, bills payable, outstanding expenses. Then we moved on to the asset side. All the assets, this is in the order of permanence. As you can see, I started with the most permanent asset, that is the land. As we moved down, then building, then I took furniture, then investment, then all these are your current assets. Debtors, closing stock, bills receivable, then we have prepaid expenses and cash in hand, and then we do the totaling. Now this important thing to be kept in mind is that the balance sheet should always tally. Is that clear, students? So the balance sheet, what we discussed here today in this class is that what is a balance sheet, how the balance sheet is prepared, what is the need of preparing a balance sheet. We also took a look at what is the format of the balance sheet and how the items in the balance sheet will appear. On the asset side, what are the items that will appear? On the liability side, what are the items that will appear? We also worked out a problem relating to balance sheet. So let's have a look at this visual. So as we can see that from these visuals they look from a manufacturing unit. So these are the pictures of manufacturing unit. Now you must be wondering why I am showing you this manufacturing unit. If you remember, in my earlier session I had talked about that if it is a manufacturing concern, they need to prepare an extra account besides trading account and profit and loss account and balance sheet. Financial statements, when they are preparing, they will have to prepare an extra statement, extra account, that is called as a manufacturing account. Now what do these manufacturing how does this work, entire process? You know, from the raw materials they move on to the work in progress and then the finished goods. Now a question might be coming to your mind, what is this work in progress? Work in progress is something, you know, it is neither in the raw material form nor finished goods, they are somewhere in between. That means it is the cost of unfinished goods of the manufacturing concern. In the manufacturing process, what is the cost of this unfinished goods? That is work in progress. Now I can show you this how this particular raw material is getting converted. So we can see wood getting converted into a chair, and then finally it takes a final shape, and that is your finished good. So today we are going to talk about manufacturing account. Now what is this manufacturing account and why is it prepared? Now basically a manufacturing account is prepared by the manufacturing concerns, and it is prepared to find out the cost of goods produced during a year. So what all goes into this? We know the opening stock and the closing stock of raw material and the work in progress, they are adjusted in this account. Through this manufacturing account, opening stock of raw material, closing stock of raw material and work in progress, they are adjusted. The opening stock and closing stock of finished goods, they are adjusted in the trading account. Now what are the features of manufacturing account? Let's take a look at these features. Now what is this account debited with? This account is debited with the opening work in progress. We'll show on the debit side the opening work in progress. Then we'll find out the raw material consumed. So raw material consumed will be the opening stock of raw material. If there is any purchases of raw material, that will add, and then we'll deduct the closing stock of raw material. That gives us the raw material consumed. Then we have wages on production. If any wages have been paid on production, that will also be debited to this account. Then all other expenses of factory like your power, fuel, depreciation of plant and machinery, etc. It is debited with these accounts. Now this account is credited with what? It is credited with the closing work in progress. There on the debit side we have started with the opening stock of work in progress. Here we are showing the closing work in progress. It is also credited with the sale of scrap. Now the question comes to your mind is, what is scrap? Scrap, अगर आपको सबको पता होगा, रद्दी माल कोई भी मैन्युफैक्चरिंग यूनिट में जो भी माल बच जाता है जिसको बेच के कुछ पैसे ला सकते हैं उसको स्क्रैप बोलते हैं. तो by way of sale of scrap, if any amount is derived, then that is shown on the credit side of the manufacturing account. And the balance of this account, it shows the cost of goods manufactured, which is transferred to the debit side of trading account. So when we balance this account, what we get is the cost of goods manufactured, and then this is transferred to the debit side of trading account. So let's have a look at the specimen of a manufacturing account. You know, the manufacturing account, it's the same format like that of an account. So we'll have the manufacturing account of such and such concern. If you are preparing the name of the concern, for the year ended, for which year ended you are preparing. Then the format is exactly like that of other accounts. We'll have a debit side, we also have a credit side. So the items on the debit side, we'll have a look to opening work in progress. We'll start with opening work in progress. The next item we have is to raw materials consumed. Raw materials consumed, how do we find that? Opening raw material, add the purchases of raw material if any, total that, then we'll deduct the closing stock of raw material, and what goes, and the balance will go to the outer column. That will give us the raw material consumed. Next, to wages on production. What are the wages on production? That will be shown on the debit side. If there are any other factory expenses, they will also fall on the debit side. Let's take a look at the credit side of this manufacturing account. We'll have buy sale of scrap. As I said, If any amount is received by way of sale of scrap, that will be shown on the credit side. By closing work in progress, so whatever figure is given to you regarding closing work in progress, that will take to the credit side, and then we will balance it. The balance will go to the trading account, that is the cost of the goods manufactured or the cost of the goods produced. So let us take a look at this problem. From the following information, prepare a manufacturing account for the year ended 31st March 2019. You are given certain information. The information provided to you is work in progress as on 1st April 2018. That means it is opening work in progress. The amount is 4,000. Then you are provided with raw material. Raw material on 1st April 2018. That is, again it is opening raw material, that is 75,000. You are given sale of scrap, that is rupees 1,000. Then you are given work in progress, that is on 31/3/2019, that is closing work in progress. The amount is 5,000. Then we have raw material, that is 31/3/2019, that means it is a closing stock of raw material, that is 90,000. The next item given to us is raw material purchased during the year, that is 45,000. Other information given to us is wages on production. Wages on production provided to us is 20,000. Factory rent and taxes, that is 10,000. Salary of works manager 8,000. Depreciation on plant and machinery 6,000. Repairs to factory building 4,000. Power, electricity and water amount is rupees 7,000. So let us go from here. Take a look at this manufacturing account for the year ending 31st March 2019. So you can take a look at the solution. On the debit side, we started with 2 opening work in progress, that is 4,000 rupees. Next item, 2 raw material consumed. As I already told you, how do we find the raw material consumed? We will take the opening stock of raw material, that is given to us is 75,000. To that we will add purchases. Purchases given to us is 45,000. And from that we will deduct the closing stock of raw material, that is given to us is 90,000. So what goes to the outer column is 30,000. That means raw material consumed during the year is rupees 30,000. Next item, to wages on production. Wages on production is 20,000. To salary of works manager 8,000, that will also be shown on the debit side. It is an expense, salary of works manager. To power, electricity and water, on the debit side again 7,000. Then again to factory rent and taxes, that is 10,000 on the debit side. Then we have to depreciation on plant and machinery 6,000. Then we have to repairs to factory building 4,000. Now let us come to the credit side. On the credit side we have by sales of scrap, that is 1,000 rupees. By sale of scrap given to us is 1,000, that will be shown on the credit side. The next item we have is by closing work in progress. Closing work in progress is 5,000 rupees given to us in the question. Now after you have posted all the items of the debit and credit side, what we will do is we will total the debit column. The total comes to 89,000, and as we can see the total without taking this balance is 6,000 on the credit side. So the balance will be 83,000. So this balance, that is the cost of the goods manufactured, it will be transferred to the trading account. So this is the overall solution for manufacturing account, how the manufacturing account is prepared. So I hope I am clear with this manufacturing account. Okay, students, so as you have seen that we have prepared manufacturing account, you have seen how to prepare a manufacturing account. We have also learned how to prepare trading account, profit and loss account and balance sheet. So now I think we are ready to take up a full-fledged question on how to prepare this trading account, profit and loss account and balance sheet together. So we will take up a question. So let us move on to the question. So what is the problem? Just take a look at this. From the following trial balance, prepare trading and profit and loss account and balance sheet for the year ending 31st March 2019. So, you are given debit balances. We can see debit balances given to us are goodwill rupees 5,000, loan to Y 7,000. Please mark here, it is loan to Y, it is a debit balance, that means loan has been given. Then next item we have is machinery 8,900. Next we have repairs 550. Next item we have is rent, that is 1,400. Then we have carriage inwards, that is 1,800. Then we have bank 1,500. Next item on the debit side we have is debtors 7,400. Let's move on again to more items on the debit balances. We have wages, that is rupees 6,000. Stock on 1/4/2018, that means it is the opening stock. Opening stock given to us is 10,650. Then we have trade expenses 1,700. Next we have drawings, that is 3,000. Next item return inwards 1,300. Then we have purchases, that is 13,500, and bad debt 300. As we can see, the total of the debit balances given to us is 70,000. Now let's have a look at the credit balances. The credit balances given to us is capital 25,000, creditors 11,200. Then we have dividend of rupees 300. Dividend is given on the credit balance, so please mark that. Then we have return outwards 500. Discount, it's given on the credit side, so credit balance, that is 500. Sales, the amount of sales given to us is 30,000. Bills payable given to us is 2,400. Now, so the total of the debit balances and credit balances given to us is 70,000. You are also given the value of closing stock outside the trial balance, that is given rupees 12,000. So, are we all ready to go for the solution? So, let's take a look at the solution. Let me go to, first we will prepare the trading account and profit and loss account. So, let's take a look at that. Trading and profit and loss account for the year ended. So, trading and profit and loss account for the year ended, that is given to us is 31st March 2019. So, 31/3/2019. So, let's draw the format, chalk out the format. I have already taught you how to chalk out the format. So, quickly we can chalk out the format. So, we will have on the debit side and the credit side. This is the debit side and this is the credit side. And we have here particulars, then we have amount, again we have particulars, and here we have amount in rupees. So, let us get started with the debit balance. To opening stock, opening stock amount given to us is 10,650. The next item we given to us is purchases. So, to purchases we will have on the debit side, purchases amount is 13,500 less returns. Returns given to us is 500. So, what goes to the outer column is 13,000. The next item on the debit side we have is to wages. Wages given to us is 6,000. Then we have carriage inwards. Carriage inwards will also go to the debit side of trading account. Carriage inwards amount is 1,800. let's have a look at the credit side. On credit side we have by sales, the figure of sales is 30,000, and next we have is less returns. So returns is 1,300 given to us. What goes to the outer column is 28,700. Next we have by closing stock. So the closing stock figure given to us is 12,000. So let's now do the totaling of the credit side. The totaling on the credit side is 40,700. And we can see that we will have a gross profit because the debit side total, it is less than the credit side total. So we have a gross profit carried down, and that will be 9,250. Now let's bring down this. By gross profit brought down is 9,250. Let's go to the debit side of this profit and loss account. We have two repairs. The amount of repairs given to us is 550. We have rent. The figure of rent is 1,400. Then we have trade expenses. So the amount of trade expenses is 1,700. Then we have bad debts. So the amount of bad debts is 300. We have some items on the credit side as well. So by dividend, the amount of dividend given to us is 300. And we have discount. So the amount of discount is 600. Let's now do the totaling on the credit side of profit and loss account. The total will be 10,150. So we have a net profit, that is the net profit is transferred to capital account. So it is transferred to capital account, and net profit you will get is 6,200. So I hope this is the trading and profit and loss account, and next we will take a look at the balance sheet. Okay, so let's now take a look at how the balance sheet will be prepared. We have got a net profit of 6,200. So let's take a look at how the balance sheet is prepared. And all of you remember the format of the balance sheet. I had already just taught you how the format of a balance sheet is prepared. So we'll prepare the balance sheet. So let's take a look at that. And okay, so the balance sheet as at 31st March 2019. Here we have the liabilities side, and then here we have the asset side. That is, on the right hand side we have the asset side, on the left hand side we have the liabilities side. So let's go ahead and see how the balance sheet is prepared. As I already told you, on the first item that will appear is capital, because I am preparing it in the order of permanence. So capital, the amount of capital given to us is 25,000. To capital we will add net profit. So add net profit. The net profit which we calculated from the profit and loss account, that was 6,200. So the total is 31,200. less drawings. We will deduct the drawings from here. So, the amount of drawings given to us is 3000. So, 31,200 minus 3000, that is 28,200. The next item on the liability side, we have creditors. So, the amount of creditors given to us is 11,200. Next, we have bills payable. So, the amount of bills payable given to us in the question is 2,400. I think those are the items that will appear on the liability side. Let us now move to the asset side. On the asset side, we will start with goodwill. The amount of goodwill is 5,000. So, goodwill, as you all know, it is the value for the reputation of the firm. So, goodwill 5,000. Next item on the asset side we have is machinery. So, machinery is rupees 8,900. Then we have loan to Y. Loan to Y, as the loan has been given to Y, so it is on the asset side. We have 7,000. The next item is debtors. So, debtors, the amount is 7,400. Next item we have is closing stock. So, closing stock on the asset side, the amount of the value of closing stock given to us is 12,000. And then we will have lastly bank. So, the bank balance or the cash at bank, the amount is 1,500. And after all the items are posted on the liability side and the asset side, now we will total both the sides. So, the total of the liability side is 41,800 and the total on the asset side as well is 41,800. So, as you can see, this is the balance sheet and we have completed our balance sheet. Just have a look at this balance sheet as at 31st March 2019. On the liability side, we started with capital, we added net profit to the capital of 6,200 and then we deducted drawings therefrom, which gave us 28,200. Then we have creditors, that is 11,200, and bills payable 2,400. We went to the asset side. On the asset side, we had goodwill of 5,000, we had machinery of 8,900, then loan to Y 7,000, debtors 7,400, closing stock 12,000, bank 1,500, and the total, as we can see on the liability side and the asset side, is 41,800. So, this was a full-fledged question that was worked out, and we have seen how we have prepared the trading and profit and loss account and the balance sheet. Now, I think students, you are ready to go for some smaller questions. So, I will take up some one or two small questions and we will take a look at them, how the solution work goes. So, let us take a look at this small problem. Problem 1, we have opening stock given to you is 10,000, then purchases 18,200. We have expenses on purchases 2,000, sales 30,000, expenses on sales 1,000, closing stock 12,200. You are asked to calculate the cost of goods sold and gross profit. So, take a look at this. How do we find out the cost of goods sold? The cost of goods sold is opening stock plus purchases plus expenses on purchases less closing stock. That will give us the cost of goods sold. So, opening stock value given to us is 10,000 plus 18,200, that is purchases, plus expenses is 2,000, expenses on purchases, that is 2,000, minus 12,200. So, we got the cost of goods sold is 18,000. We are also asked to find the gross profit. So the gross profit is net sales minus cost of goods sold. So that will give us 30,000 minus 18,000. Net sales is 30,000, cost of goods sold is 18,000. So the answer is 12,000. So 12,000 is your gross profit. Let's take a look at another small question. So this question is, cash sales given to you is rupees 29,000, credit sales 31,000, cost of goods sold 52,000, expenses on purchases is 3,000, expenses on sales is rupees 6,700. Find out gross profit and net profit. So just have a look at this. We have the cost of gross profit is equal to net sales minus cost of goods sold. So that will give us 29,000 plus 31,000, that is, we will get the net sales minus cost of goods sold is 52,000. So 60,000 minus 52,000, the gross profit is rupees 8,000, and the net profit is gross profit minus indirect expenses. So 8,000 minus 6,700, that gives us 1,300. So I think students, now you have seen how the gross profit and net profit is calculated. So we have worked out small problems relating to calculating of this gross profit, net profit, how to find out the cost of goods sold. And let's take a look at this problem. Drawings is rupees 15,000, profit for the year is rupees 25,000, closing stock is rupees 70,000. You are asked to calculate the opening capital. So how do we do that? We will see that opening capital plus profit plus additional capital minus drawings, it gives us closing capital. So how do we find out this? Opening capital plus 25,000 plus additional capital, we have not been given an information, minus 15,000 is equals to 70,000, and opening capital is equal to 70,000 minus 10,000. So that gives us rupees 60,000. So I hope all these questions are clear to all of you, and we have seen today how the balance sheet is prepared, how manufacturing account is prepared, and how we have solved a problem relating to both trading account, profit and loss account, and balance sheet. And this we have also solved out some small questions relating to gross profit, net profit, finding out cost of goods sold, and how to find out the opening capital. Thanks to all of you for giving me a patient hearing.